So very happy day to all of you, my dear friends. Now let us go for the another important concept for examination, assertion. See, the name itself look like something different terminology in auditing paper. Assert means certify something, express something. Now assertion. So the entire concept of assertion we are going to understand in the perspective of the management. Now, before proceeding to this particular assertion concept, let me use the example for the better understanding purpose. So, we all know that there is going to be a company in India and statutory auditor of the company. Company is going to prepare the financial statements which consist of the 5 components. So, these financial statements consist of the 5 components as per section 2 subsection 40 of the Companies Act. So, profit and loss statement, balance sheet, cash flow statements, notes and changes on equity capital. Now management is held responsible to prepare the financial statements or TCWG wherever applicable. They have to prepare the financial statements as per the accounting standards as per the schedule 3 format. Now when they prepare the financial statements as per the law, once the financial statements are ready, then the statutory auditor of the company will come and verify the financial statements. Now the common point here is, common parameter here is, common base here is financial statements of the company. Now let us take the classical example in the balance sheet. So in case of the balance sheet, so there is going to liabilities and assets in the balance sheet. Now let us take one example, land and buildings having around 100 crores. Now when management gives the information like this to the auditor, what it means, what it implied. Now when the management certify these financial statements and when given to the auditor has to understand in two ways. Some of the points in this is implied, that means auditor has to assume and he can verify, and some of the points in this explicitly management have told. Now what is implied here, what is explicit here, let us understand. Now in these financial statements, explicit here means directly they are giving information. Implicit means indirectly. Very easy to understand the concept. So implicit means indirectly, explicit means directly. Now what is direct in this? Amount is direct. That means land and building value is 100 crores. Management trying to tell that 100 crores is the value of the land and building, value is given directly. Then what is land and, one other point we need to understand is land and building is company ownership. Now ownership is not directly given in this particular land and building point. Now what auditor has to understand, what auditor has to assume? Auditor has to assume that indirectly the land and building belongs to the company. So now come to, they are going to prepare the financial statements for 31st March. Let us give one financial year 2024. Now what is explicitly stated here? This land and building value is up to 31st March 2024. Now explicitly, directly they are given that the financial statements is for 31st March 2024. Now this is the classical example for this assertion. Now let us understand the meaning and understand the another example for easy way of remembering this for examination. Now assertion refers to representations by the management. What representations? Representations can be implied or explicit, just we given the example. So one point we need to remember is it is representations of the management. This can be also called as management representations, financial statement assertions or audit assertions. So because it is given to the auditor, we call it as a audit assertions. Now management assertions means, what is the meaning of management assertion? Now it means the claims made by the management certifying the financial statements which are presented are completely correct and accurate. That means 100% we recorded. What is the meaning of the word complete? 100% we recorded. Then what is the meaning of accurate? Whatever is given in the financial statement is true and exact information. If you want, we can give the information and clarification explanation to the auditor. Now in our example, whatever given so far, the land and building value is given as a 100 crores. What it means? The land and building value is 100% we recorded, we have not omitted anything is the explanation for this particular point. Then what is accurate here? whatever the value is given 100 crores is the true as per our information. If auditor needs, auditor can verify. Now there are two types of assertions, that means direct and indirect. We call it as a explicit and implicit. Implicit means what? Implied. What is the meaning of implied? Auditor should assume and verify. What is explicit? Directly given in the face of the balance sheet or profit and loss statement for that matter. Now example, if ABC Limited Company balance sheet shows building worth carrying value of 50 crore rupees, the auditor shall assume some of the points in this. What auditor should assume? Now auditor should assume that the land and building belongs to the particular company. Now building recognized in the balance sheet exists as at the period ended, that is called existence assertion. So land and building is existed. If the land and building is not existed, management is not going to show in the financial statements. Then company owns. Who is the owner of the land and building? Company is the owner of the land and building. Then auditor should assume that company is the owner, and if auditor need, auditor can verify. Now it is called the right over the building belongs to the company, and if any loan taken to purchase that building, the obligation to pay the loan also belongs to the company. We call it as a rights and obligation assertion. Then comes to building has been valued. What is the value? 50 crore rupees accurately. So we have done the valuation of the building, opening balance of the land and building plus additions minus deletions minus depreciation, then we given the accurate value. That is called valuation assertion. Then comes to building is owned and controlled by the company are included completely with the carrying amount of 50 lakh rupees. That means we have recorded complete information. We have not omitted anything. We call it as a complete assertion, completeness assertion. Now let us summarize this. How many assertions are there? So as far the balance sheet is concerned, we have 6 assertions. As for the income statement is called 5 assertions. Why 5 assertions? In case of the income statement, there is not going to be a rights and obligations, because rights means assets, obligation means liabilities. The rights and obligation belongs to only balance sheet, hence this assertion is not applicable to the income statement. Now balance sheet, we call it as a, if any assets are existed, we call it as existence assertion. In case of the profit and loss statement, there is not going to be any assets, there is only be expenses in incomes, which is called as the occurrence of the transaction. We call as the occurrence of the assertion. Then comes to completeness, balance sheet transactions 100% recorded, profit and loss also 100% recorded, common point. Then comes to cutoff. Cutoff means up to 31st March of the particular financial year we recorded the transaction. Profit and loss also 31st March we recorded the transaction in order to reflect the true and fair view of the financial statements. Then comes to valuation. The assets and liabilities should be valued properly, accurately. In case of the profit and loss statement, instead of valuation, the alternative will be taken as a measurement of the transactions. Then comes to presentation and disclosure and presentation and disclosure. Either balance sheet or profit and loss account, management has to present as per the applicable financial reporting framework, which means Schedule 3 format and accounting standards. In case of profit and loss also same concept, auditor, the management has to follow. That auditor should verify properly. Now one line summary of entire discussion. Assertion means management certifications, management explicit implicit representations. In case of balance sheet we are going to have 6 assertions. In case of the profit and loss account we are going to have 5 assertions. Why 5? Rights and obligation not applicable to the profit and loss. So existence means assets and liabilities are really existed. Occurrence means transactions are really occurred. Then completeness means 100% transactions are recorded. Cutoff means up to 31st March of the particular financial year we have recorded the transactions. We have not recorded next year transactions the current year, and current year transaction next year. We have correctly recorded, that is the assertion given by the management. Then valuation, assets are properly valued and expenses are properly measured. Then presentation disclosed as per the law we given. This is what management is doing, assertion to the particular financial statement that auditor should verify. Now requirement of Schedule 3 of the Companies Act have to be kept in mind while verifying the assertions of the companies. So management is trying to give their own assertions. Whether the management assertions are proper, management assertions are as per law or not, auditor should examine, and once auditor examined, he can form the opinion based on the information obtained. Now performance of the such audit procedures to verify these assertions leads to obtaining audit evidence. What is the meaning of audit evidence? Information to be collected from the management, so which is evaluated by the auditor, and finally to give the conclusion in the form of opinion whether the management assertions are proper or improper. Whether the management assertions are as per law or not as per law, auditor should examine. Now in the essay material it is given, In case of balance sheet, how many assertions we told? 6 assertions we told. What is 6 assertions? Existence assertions, then completeness assertion, cut-off assertion, valuation assertion, rights and obligation assertion, presentation disclosure assertion. Very, very important for examination. And one of the question is given in the RTP also for examination. Please practice that question as well. Then income statement comes to the 5 assertions: occurrence, completeness, cut-off, measurement and presentation disclosure. What are common here? Presentation disclosure is common in both the assertions and completeness is common in both the assertions. Then what is difference here? In case of existence, balance sheet, we call it existence. In case of profit and loss, we call it as a occurrence. In case of the balance sheet, we call it as a valuation. In case of profit and loss, we call it as a measurement. That's all, my dear friends. So thank you for watching this video regarding assertions. So if you have any doubts, please comment on the comment box so that we can give the reply for your particular queries. So thank you and all the best for your examinations.